I'm going to discuss Chapter 3, titled You're Moving, Convert Your Primary Residence into a Rental Property. So basically what we're looking at here is it's time to move. You look at, do I sell my home or convert it into a rental property? And I'll talk briefly through some of the financial products I introduced to conduct the analysis of whether that makes sense for you financially. So the first thing we look at is a market and cash flow analysis, similar to what we did for the spare bedroom, but this is looking at renting out an entire home. All of it leading to getting, hey, what can I actually rent this home out? And that drives your cash flow analysis, where you're going to look at your projected monthly rate, your operating expenses, your debt service, and see if I convert my home to a rental, will it actually generate positive cash flow? The next thing we look at is, assuming you have made this conversion, how do we account for the financial transactions to set ourselves up to record all of the results of our newly converted rental property on Schedule E, where you report rental property operations on your tax return. So this is where we look at a spreadsheet model for your bookkeeping using modified cash basis. So what Schedule E for your tax return requires to record the rents you've received, the expenses that need to be allocated due to annual timing of the conversion, and then your non-allocated rental expenses, so things that are 100% devoted to your rental property and fully deductible. And what we ultimately settle on is your Schedule E income or loss, or your taxable income or loss, and then we convert that to net cash flow. So are you actually getting positive cash flow from this deal? Next thing I briefly touch on related to that cash flow is a concept called accounting income. So we look at those handful of situations where we may not be cash flow positive, but we're still building on our net worth. And I introduced that really just to explain that sometimes it helps to have an additional metric beyond cash flow when analyzing a potential deal. And the last model we look at in this chapter is how to calculate your annual depreciation expense for a converted home rental. So that's what this model's doing. In Chapter 2, we looked at just calculating depreciation for a room you're renting out. This looks for calculating depreciation expense once you have actually converted your full home from a primary residence into a rental property, and then what is the annual depreciation expense for that newly converted rental. So thanks again for the support. I look forward to hearing everyone's thoughts.